We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up FRC. We are on a 12-month time frame. Price action, last candle to right hand side is a huge bullish green doji that received some pullback and sitting at the numbers of 39.63. So when that price action candle did tag that low area, it came to retest the previous side near the areas of the first, second, third, and some of that fourth, the last candle of the market. So you can see the market is tagging that area. So if the market pushes down further, it can head back down to near the areas of the price action wick, or near that midpoint maybe of that wick in current price. So market can push back down to the numbers of 26.52 before dropping down further out that zone. If not, the market can create some momentum off that push of the return and push right back up. And if so, market can start tagging levels of that price action candle before it heads up to the high of the overall structure. So if price action pulls back more or reverses with a opposite color candle, which would be green, and work its way back up, then price action can tag that midpoint of the price action candle nearing the numbers of 78.53. If price action push up further, it can head up to the top of that price action candle body, which would be near the numbers of 122.71. So what we're going to add is the midpoints. We have price action, which is currently at the low area. This is the high in this area here, and the price second, third, fourth, fifth, sixth, seventh, eighth, and ninth candle in the market is the midpoint area. And we can clearly see that we do have a high. So we have a high, a mid, a low. Market's hanging out the low. We're going to see if it's going to reverse and work its way back up through the levels. Let's take out the left side to see what happened. So when the price did start off and did come up to spike that high, market created those levels from the first candle in the market. So first, second, third, fourth candle in the market pushed up. The fifth candle was a retest. Market pushed, came back to retest, which we do see the retest on that midpoint zone that we created, and the market did another push before it lost momentum at the high. We had identification here with the third to last candle spike up to the high. Momentum may be lost and may be ready for a reversal, and a reversal did happen with the second and the third to last candle. Market came to the midpoint with the second to last candle, and we can see that price action came back to retest that second to last candle before pushing down further back to the lowest lows of overall structure of the zone. Walking down to the 6-month time frame, so price action 6-month time frame reading as a bearish red candle, same as a 12-month time frame. So market just came back down to a low. We see extra candles between the first, second, and the third on the 12-month time frame. We identified as 2 candles that pushed that market down, and the reason why, when we was on a 12-month time frame, we seen a retest with the wick, and we can clearly see what that retest is, and that's coming from the second last candle, which is a large doji long wick up to the top. So this retest creates that double top, would push that market down. So we drawing out the pattern of what happened at that high. We do have an overall first leg, second leg. The second last candle wick is the retest and price action push down. So we have a double top in that area. The only thing we don't see as we walk down is when the market price broke the midpoint, we don't see a retest for that market to come down further. But we do know, and we can clearly see that price action did drop down with that price action to that area of support. So as we're walking down, we're going to see if we can identify a retest from the midpoint to the lowest low of that zone that we created on a 12-month time frame. 3-month time frame, price action, huge bullish green, huge bearish red doji. It's still identifying a breakthrough from the midpoint to the low. Don't see a retest yet. Headed down to the monthly, same as well. Huge bearish red candle on the monthly time frame. long wick down to the bottom on this. So market went into that zone, tagged that zone, and then pushed back up and closed out. So market can be consolidating sideways. So we may be receiving some dojis, or maybe it'll just identify as a growing a bullish green candle to come back up. If not, we are basically in consolidation or near that zone area until we see the market is going to come back to retest that midpoint. So that's what we're looking for. We have the break. We still seeing if we have the retest that for that market to push down further, or unless it reverses, and if so, it creates support off that lowest low of that zone and work its way back up. Headed down to the weekly time frame. So we have a few gaps in the market with the between price and second. Second to last candle has identified a spike down to a low, so a reversal could have happened, but it did end up pushing down further. So remember, it's a gap in the market, so it's something could be in this area here as we walk down the time frame. But what the second last candle did is identified that it did tag that lowest structure of that zone in red at the bottom, and we was looking to see if that market's reverse, but we end up receiving a gap in the market, and then a price action formed with the bullish green candle, which is a doji within that zone. So this area is consolidation. We still don't see the retest, which the market still identified the break, as we see the break into touch with the second last candle. Price action could push back up with a few bullish green candles, a retest, at least maybe the midpoint, because it may not retest the midpoint of that zone, which would be the red area of the zone here. So it could identify it as a push, let's try that again. It can identify it as a push, which would be the break. Price action came back to retest, and now we got to figure out what's going to happen. It could push down further, or it could just create some support and work its way up through the bullish green candle that's created with the price action. Daily time frame, price action, bearish red candle still have a lot of gaps in the market. So price action on the daily time frame reading as a bearish red candle doji. Second last candle, doji as well. So we got two dojis in the market side by side, but elevated. So what the second last candle did was went into that zone, created that consolidation with the second last candle, and then the market switched off with another color. Instead of receiving a bearish bullish green candle with the price action to push that market up, it could have been green at first and it switched over to red. So what's happening in that area is that it identified a push down, market came out the zone but still pushed back down for a retest. So what it's reading as is a first leg, second leg, third leg. It still can create some support and push up with the following bearish red candle, bullish green candle to push that market into a W formation. Until then, know that we are in an area of consolidation. This receive some elevation, so we're looking for to see what's going to happen in that area. Walking down to the 4 hour time frame, price action 4 hour time frame, much clearer. Price action bearish red candle, second last candle, bearish red candles as well. Both the dojis, very weak candles, same as the third last candle, fourth last candle. So we have a consolidation here with some elevation. So once again, market came down to that area, that zone, pushed up out the zone, came back to retest, and that's what we see, that formation of that first leg, second leg, third leg. Is it going to engulf the price in second with the following price action candle to push that market up into that W formation? If not, market can lead back into that zone area, and then we'll be waiting for that pattern to form for the breakout to the top side or to the bottom side. Headed down to 3 hour time frame. So price action on 3 hour time frame, reading as a bullish green candle. Market's still choppy, so we still know that we're in a choppy market, plus we are in a consolidation with a little bit of elevation. So let's see what we see. So market is identifying multiple structures. So there's a gap in the market, which between the price second, third, fourth, fifth, sixth, seventh to last candle, sixth and seventh to last candles is a gap in the market. The eighth, the ninth to last candle in the market is a spike down. So what happened is market spiked down for that first leg, pushed back up for the retest, where it broke the zone, came back to retest, pushed back into the following zone, pushed back out the zone, retest the zone, follow up with price action being a small bullish green candle, which can push that market up. If so, we'll see that W formation. The market can lead and head back up to the midpoint of that zone, nearing the numbers of 78.53. Okay, guys, this is Cam Jones, FX, FRC, Star.